Hi, I'm Dr. Morbaja, astrodynamicist, space environmentalist, and associate professor of aerospace engineering and engineering mechanics at the University of Texas at Austin.
I'm Alistair Funge, Space Policy and Operations Engineer.
I'm Dr. Christopher Newman. I'm Professor of Space Law and Policy at the University of Northumbria in Newcastle in the United Kingdom. I'm also International Space Law Advisor for Cold Star Technologies.
And I listen to the Cold Star Project.
And I listen to the Cold Star Project.
I listen to the Cold Star Project.
As a venture capitalist, you get to see a lot of pitches. All of them have the same curve. There's always a business model where, you deep down, you have to invest. And then, within 2 to 3 years, boom, skyrocketing, taking off and everything. If that is the case, of course, very nicely. But sometimes you see business models where you're like, okay, that's completely unrealistic. And where also the startups go like, yeah, but you have to put this in. Yeah, so for me, that's always a little bit annoying to see because I'd much rather like to have a realistic business model, maybe let's say a optimal, worst case, realistic case, those kind of things, and then also understand what the foundation is of this. Because I mean, everybody can draw a hockey stick, and then something will boom and go explode. But I mean,
welcome back to the Cold Star Project. I'm your host, Jason Kanigan, the founder of this thing. Cold Star Technologies, a data science, that means machine learning, and a process improvement firm, that means we make things run more smoothly and efficiently for other companies. I am here with Egbert van der Veen. He is the head of strategy and managing director of venture capital at OHB Group, and he's been doing this since 2013. Obviously, I want him on the show because he's investing in space companies, and that's what we're all about here on season 3 of the Cold Star Project. Thanks for being here.
Oh, thank you very much for the invite.
Well, yeah, it was a quick connection, and I asked the question, "Hey, do you want to be on?" So you are a scientist. You have the engineering background. Before you got into venture capital, you were a project lead at DLR, the German Aerospace Center, for 4 years, working with them, ESA. European Commission, and that writing, among other things, advisory reports on technology development trends. You have a master's degree in technology management from the University of Groningen. I see. This is my instruction to myself here. I'm like, why is it say in my notes, rasp, Groningen, Groningen, right? It's how to pronounce it. Okay, that has been a little bit. And your thesis was on forecasting disruptive space technologies, which, as you pointed out in the notes here, seems like whoop-de-doo today, but was actually quite innovative at the time. And so I want to dig into that. So your scientific topic, in continuation of that master's thesis while working at DLR, was forecasting disruptive space technology. So I am very curious what you learned and how that influences your point of view out here in the business world.
Yeah, well, gladly. So just a little bit on the topic of the disruptive space technologies. I mean, at the time, it was fairly new. I mean, I think Clayton Christensen's book on disruptive technologies and disruptive innovation just came out. And at that time, so I started, I think, in 2019 at the DLR. It was a big hype. Everybody was saying it, oh, no, we should invest into disruptive technologies. And nobody actually had any clue of what a disruptive technology was. It was it was a nice hype name, but nobody really knew what it was. So at that time, some people at DLR and ESA and EC said, okay, let's just bring a study out there and ask, okay, what are disruptive space technologies? What are the upcoming ones are? And where should we put our money in the future? So yeah, basically at that time, just fresh out of university, or actually was still in university, I was writing my master's thesis on it, thinking, okay, I'll tackle this subject. First realizing at all that the disruptive technologies that Clayton Christensen at the time described is not fully applicable to the space sector that much. We have a lot of governmental driven innovation a little bit. Since basically government contractors are our main customers and they basically drive also the technology through funds and everything. So it's a little bit of a mixed up thing. So therefore I decided to make a new theory and say disruptive space technologies. Now, just real quickly on what a disruptive technology is, most people think of what most people know on technology development. You have this Moore's law. You know, everything always gets better, faster, and you know, chipsets go down, sizes, capacity goes up. And then what we found out is that actually most technologies do not develop that way. What happens is that markets change, customers want different things, and then at some point what they used to want to have is not the same anymore that they want to have in the future. So for example, it was a long time a trend where people wanted to have for their media, for music, they want to have better and better quality. At some point MP3 came out and they were like, no, it's actually less quality, but you can basically take your entire library in your pocket. And it's a little bit of a change. So it's called a perceived customer value. And yeah, so this basically changed then. And what we decided to do is to look in space. Okay, what is actually changing the market, and what does that mean for technology development? So, for example, new space, things became maybe not more complex, not more advanced, not more expensive, but it took the other way around, where it's like, okay, it's good enough. We're just trying to curb the price on it.
Okay, so yes, you're looking to identify the driver of that innovation, and where does it come from? And you're saying it's not more, bigger, better, faster. It's a change in customer tastes almost, or what they want. Okay, all right. So, and that is enabling you to look into the future, hopefully, and predict those changes in behavior. Is that what you're, in preferences? Is that what you're looking for?
Yeah, so what you're doing a little bit, I mean, you're looking at these macroeconomic trends and where are things going, and for example, I mean, how does a market change? I mean, telecom is looking very different now than it did in 2009. I mean, you had these big birds, and it was everything like, okay, we need to get the cost down, and satellites are going bigger and bigger and bigger. If we look now, I mean, satellites are getting smaller and smaller and smaller. Electric propulsion came into play also, because of the launcher market changing. And currently you have a lot of flexibility within payloads as well. You have LEO, GEO, and maybe also MEO combinations. So basically everything, did not develop the way it did. I mean, basically Netflix came up and all other kind of video streaming websites, and people do not require DTH, direct-to-home transmissions that much anymore. So the entire market is off, and you have to change. You check, of course, which technologies fit with that changed world. Okay,
and so spotting these trends. So I'm curious now how you landed the role of managing director. I mean, it's not science, right? I can see some of it, right, nascently forming in your earlier studies. What technologies do we want to look at developing? But how did that happen?
So, I mean, I first did my basic scientific studies there, and then I found out that it doesn't really make sense as a scientist to, think of what the next things might be. You really have to go out and talk to industry and to try to understand what they're developing, what they see as the next big thing. So I had a project then together with OHB, and then they said, this was a good job on the project here. Why don't you come join us and to become a technology manager for us? Which I thought was very interesting, of course, fit to my field of what I was doing in the past. And then I managed, I think about 6 years. I managed the technology development, so everything technology, R&D, innovation for our company. And then last year I was asked then, okay, do you want to move, let's say, away from technology and do strategy? And I thought, okay, that sounds very exciting as well. It's a little bit also future looking, so that's very exciting. Yeah, and then because we are, let's say, as OHB, we are a big satellite integrator, so we're not usually that much of a venture capitalist. We're not a financial investor. We already had this strategic VC already, which we didn't really do that much with. And then the founder of the company asked me, like, okay, do you maybe want to do that? And I was like, okay, sure, why not? So basically it was also a little bit of my other job as being head of strategy, and that the strategy should determine where we do our venture capital towards. That is fit in together.
Okay, so there was kind of a bit of an evolution of the company as well as yourself, and I think because you were there, you probably helped them have that capacity, right? It may not have existed if you hadn't shown up.
OHB was about 1,600 people when I joined, and we're currently about 3,000. So we have grown quite
lots
quite
and lots, yeah, of folks joining. Okay. Your scientific career focused on innovation management in addition to space engineering. And so what does that bring for you to, when you're investigating, you're doing an analysis and making a decision compared to other VCs who might not have that background?
So, I mean, I personally, of course, have the background that I know very well of how technologies and products are being developed, and the experience of seeing what works and what doesn't work. So that's already at least good. What is good at OHB, of course, the link there that I don't only have my own expertise, but I also have the expertise of about 3,000 other space engineers, business developers, marketing, everything back behind that. It means that I get a very good, let's say, possibility of doing very good due diligence, which of course helps quite a lot with that. So I think that is something that is quite beneficial for me at least. Yeah.
All right. So when you're scouting, let's say, you're looking at potential companies to invest in, what do you look for? What would be the ideal discovery? So
as we are a strategic investor, of course, our first criteria is that it fits to our strategy, which means that, I mean, we have a certain strategy of things, okay, where we say this would be interesting. And that focuses mainly around synergies that we can get. So those are synergies with products, which means, for example, a startup offers a product that that we can't offer, but would, let's say, complement our portfolio. So we offer A and C, they offer B, fits very well together. So therefore, we invest inside of this company. Or there's a synergy with a customer profile. So that could be, for example, we deliver to EUMETSAT, or let's say a very big organization or a customer of ours, and this startup tries to get in there. So we see that once we invest, we can help this startup to gain this customer access, which means it's a little bit a win-win situation. So these kind of things is what we're always looking for. That's basically just the particularities of a strategic investor. Then, of course, on the other hand, I mean, there's many, let's say, standard answer. Of course, we're looking for a good team. We're looking for a good business model. Things like that. What's a little bit different with a strategic investor, of course, that we as a company, I mean, our company won't, let's say, fall or succeed based on the success of this one investor, so our investment. Therefore, we have a very long breadth, a little bit of a very long futuristic horizon, which makes it, of course, a little bit nicer and sometimes also interesting for startups.
Okay. How long does a fund live for you?
So, I mean, it's not that much of a fund. There's no, let's say, specific budget inside there that we will try to give away. That's a little bit different with another venture capital, for example. What we do is basically we only do opportunistic basis. So we look at something, we look at it, we do very good due diligence, we check if it fits to our strategy, and then we invest into that. I think the VC has existed for since 2015, perhaps. So I think 5 years. In that time, that's been variable. Sometimes we did years nothing, and sometimes we found an opportunity. Currently, where we're investing quite a lot into is a new company, a rocket factory Augsburg, which make launchers, for example. That's a new thing. Currently, we also have a new strategy, which means that we currently looking up to ramping up also our VC investments. And that's mainly a little bit into, let's say, called downstream applications or services that result from space activities.
Okay. What allows you to have that open-ended sort of runway there? Are you deploying funds that are brought in from outside investors, or is it all internal inside the company?
It's currently all internal inside of the company. We are of course open for that, but I think it makes more sense to co-invest with somebody else. Yeah, because I mean the good thing that we have in our company is that the ownership of OHB is 70% a family-owned company, which means that basically you talk to one person, this one person decides. So at least, let's say, this allows us very much the flexibility also to invest on a very quick manner. Therefore, we don't really need to look for external funding. That doesn't really help for us. But of course, we would like to co-invest with other VCs because we will maybe not want to carry the risk all by ourselves.
Right, right. What is the geographic range that you'll invest in?
Mostly focused around Europe and US. At least that's currently our search portfolio. We get the feeling that most things are happening there. Europe, of course, because it's close to us and we have customer access there. In the US, I think that there's often a little bit more risk taking and therefore more products being pushed out. So therefore we're focusing a little bit on those lines. Of course, opportunistically open if a Japanese company comes or a Southeast Asian company and has a great idea, it's not excluded, but at least this is a little bit where our search ratio is.
Okay. Hey, this is Jason Kanigan from Cold Start Tech. Thanks for listening in. I'm going to quickly interrupt the interview to talk about a new course I am offering for space startup founders. If you're a space startup founder and eventually you're looking at getting invested in, getting some of that good old venture capital pouring into the system, then you're going to need this, because I have done tons of one-on-one calls with space founders and discovered several consistent things that are just plain missing from their businesses. And these things are so important that every time a VC looks at your pitch, they're going to say, nope, no thanks, bye-bye. And so if you want to avoid that problem from happening and actually get to the promised land of being funded, then sign up. All you have to do is go to this address and drop in your email and sign up for it. It's coldstartech.com/SBM. That is for info about the course, and the first part of it will be given to you as it comes out. So go check that out. Do it now before you forget if you're a space founder. And now let's get back to the interview. Now, you've got a note here in our Google Doc here that I use to set up these things where we put in some question and answer notes in that. And you've mentioned this a couple of times, not just another hockey stick. You do not like the hockey stick curve. I find that very interesting, and I'd like to hear more about your take on it.
Yeah, so I mean, you know, as a venture capitalist, you get to see a lot of pitches, and all of them have the same curve. There's always a business model where, you know, you deep down, you have to invest, and then, you know, within 2-3 years, boom, skyrocketing, taking off and everything. If that is the case, of course, very nicely, but sometimes you see business models where you're like, okay, that's completely unrealistic. And where also the startups go like, yeah, you know, but you have to put this in. Yeah, so for me, that's always a little bit annoying to see, because I'd much rather like to have a realistic business model, maybe let's say a optimal, worst case, realistic case, those kind of things. And then also understand what the foundation is of this, because I mean, everybody can draw a hockey stick and then something will boom and go explode. But I mean,
yeah, what's the actual ignition for that, folks? Yeah. All right. So I'd like to hear more of whatever you're willing to share or not share, you know, about your experience with space founders and space companies. Like, what state do they typically arrive at your firm at in? What mental attitudes do you commonly see in founders? Are there things that you wish that you could sort of wave a magic wand and change in them before they show up and meet you?
So, I mean, so for me, what's very important a little bit that you understand what your customer is. I mean, you have to really understand the market where you're going into. I mean, this is also disruptive technologies. I mean, it depends at all, I mean, what your market wants. Sometimes you really deal with people who don't have any clue of what their own envisioning market will look like, what their own customers need. And this is, yeah, I don't know. It doesn't even make sense to knock on a door. Let's say you at least have to have a let's say, letter of interest from a customer, preferably where they say, okay, if this is being offered, we will be able to pay this much for it. That already would be great. Or potentially even that you have, let's say, customer co-investing already in this stage with us. That, of course, would be great as well. But at least something there. Don't completely start with nothing. I had, let's say, the last couple of months, I looked very often at, let's say, Internet of Things companies, that provide machine-to-machine IoT, with satellite, and their usually business model is, we build a constellation, we put it in orbit, we offer a service via the internet, and then boom, there it goes. I mean, we know this business a little bit as well. OHB is invested into Orbcom, so we know how this works. And we know also what the difficulty is with these kind of businesses. I mean, 99% of their sales, or I think 95 or something like that, is being done over cellular networks. There is a little bit of extra coverage which is done by satellite, but most of their turnover is just conventional business. And if you just say, okay, here, I'll take market report of NSR and say this is a huge business, and I'll be able to grab 10% of this, and this is my business model, it's just not enough. You have to really understand, okay, where are the current customers using this for? What's my unique selling point? What can I do better? What can I do differently? And also, what is the cost of my sales? I mean, if somebody implements a solution of a container tracking or whatever, it costs a lot of, let's say, effort for you to convince them to take your solution, especially if they didn't have anything in the first place. So, it just needs to be a little bit better worked out, let's say, how things like that work and how the market works, what are your customers, how much money or much effort do you need to spend on selling your product also. Having a satellite system in orbit, which is a mistake that often people make. I'll make a satellite constellation. Once it is in orbit, it's going to sell itself. Unfortunately, space is complicated, and nobody sits around waiting for a solution and Googles the internet constantly and then be like, oh, yeah, that's what I need. So I think that's a little bit naivety in there, and I think would be good. But people at least acknowledge that and try to make a plan how to mitigate that. Then.
Right. Right. Well, for the keen listeners amongst us, you have just given a laundry list of items that founders can go get to present to you and other venture capitalists and that to demonstrate confidence in the idea. I have met and talked with, done a lot of one-on-one calls with space startup founders, and I've been hammering on this idea of who's your customer and how well do you know them and that. And there is this great belief out there, and it's a bad belief, that if we create the capacity or if we create the capability, just the technology alone will suddenly drive it. No, there is no if they build it or if you build it, they will come. That does not happen. You have to get out there and line people up. What's in it for the other guy, right? And they will not understand it the way you do, founders. They will not get it. They will just, I mean, look at how people use GPS on their phones. They probably don't even really know what's happening. Right? It's just the thing works on the phone and it tells them to get from A to B, and that's good enough. They don't understand that there's something up in high orbit, bouncing signals around and dealing with relativity, like a Dr. Mark Ziebart would figure out. And they don't care. The majesticness of the solution.
That makes sense. I mean, it's not your end customer. I mean, it's also, the same thing. You have a farmer who's doing his field. He'll get some information. It could be hyperspectral. It could be, infrared, whatever. And he doesn't care where it comes from. He uses it the way that it is. But in the end, to translate what he needs, so basically it could be he needs once a week, he goes with a tractor. If you're building a system that provides an update twice a week, you're over-designing. So you need to fully understand, let's say, your entire value chain from the end user to check, okay, how does it derive any kind of system-level requirements that I have? And that is often a little bit missing. It's also very difficult because how are you going to get this? It's impossible to ask thousands of farmers how often they go on their field. But then you have to find the right persons that can tell you this.
Yeah, we can get a sample. We can buy industry reports. right? From that industry. I'll bet you I could get that information. And but it's a great point that you bring up about capturing the value chain. We hear this phrase, "You got to capture more of the value chain, son," a lot from investors in that. So, like, what does that mean to you?
So for me, I mean, you have to really understand your full value chain from the beginning to the end. So you have to understand, you know, if you make a constellation, you have to understand how the CubeSat, or let's say you're doing with the CubeSat, you have to understand who the different providers are, what the different components are, basically what is possible to create with it. And then let's say, and going in front as well, you have to understand, okay, who is going to buy my product? Who are their customers? Who are they delivering to? What are their pains? And basically, you have to understand this completely. And that's impossible for anybody to know completely on experience by heart. But that just means that you have to find the right people to be able to tell you these things, or to do an analysis for you, or something like that. You have to find your experts. So that's always an advice also that I give to startups. I mean, just don't be shy and go out and ask people the help that you want. I mean, you'll be amazed at how many people love to give advices to startups and try to help them, even though, you know, maybe pro bono, it really doesn't matter. They love being, you know, with helping people and to get somewhere. And I think you shouldn't be shy and ask out there, and of course very politely and to make it formulated well, but you should go out and ask there and to evaluate, to validate your own business case, and to try to, what they call it, kill your baby a little bit, to also ask for critique and try to grow with that.
Yeah, and I love what you're saying there. I'm going to emphasize it. A lot of people, a lot of founders are afraid to go ask for advice from other experts in that, because they think, oh no, they're going to want equity, right? They're going to want to cut. And it's not necessarily the case. Sure, you might find people who are like that, but you will find people who want to give advice. But this is my warning to you. If you ask somebody for advice and they give you a little plan of action, please do something about it. Act on it. There is nothing more frustrating for somebody trying to help to be asked for advice, and the person that gets the advice just fizzles with it and doesn't do anything with it. If you can do a little bit of work based on what they said, and then come back to them and say, hey, Egbert, I took what you said. Here's what I did. I went out and asked these people what's going on. Here's the feedback that I got. Man, you would glow. You would be so happy, you know, and you'd give more, right? And I mean, that's one of the most fun things that I do as like giving free advice and that, right? Is when I find somebody who actually goes and takes my advice and comes back with feedback, and they'll like say things that will demonstrate that they did the work, because they'll have problems, and the only way that you could have those problems is you started acting, right? Taking action. So this is very cool. You've also mentioned the business model canvas here, which is a pretty common tool that we see, but again, some people don't know about it. And Michael Mealing had to remind me that it existed, because they started teaching that after I got out of school in the 90s. It's a newer tool, but once I looked at it, I'm like, okay, I know all these things. Yes, we check for all these things.
The whole important thing is to put a little bit together, but you'll be surprised if let's say, how many startups come to us and have not figured out what is my sales channel, what is my value proposition, all of these things, and it is important. I mean, at least to have thought about it and to have a rough idea, but you see that unfortunately quite often where people just have not really thought it through yet. And what you said also before, I mean, it's great if people come on and listen to you. I also had a startup that I was mentoring at my time. And at that time, I gave them a certain direction to go. I said, like, if I were you, I would go here. And they were stubborn, and they said, no, we want to do it this way. And then a year later, he also invited me for a dinner and said, no, yeah, you're right. We basically lost, maybe not a full year now, but we lost some time, and now we're taking it your direction. And it's very nice. I mean, it's nice to be involved in those things. I do it also privately, and I don't do it over my work. But I think I'm pretty sure there's a lot more people out there who would like to do something like that. They would love to be involved in a startup, because usually those startups have a certain kind of energy, certain enthusiasm, a bit of naivety, but that's also not too bad. You try new things if you don't know what's not possible. So you know, I think you'll be able to be surprised of how many people you can ask for advice and get it without anything in return.
Right. One of the things that stood out to me from an answer you gave earlier was that idea of knowing the frequency of the farmer going out and driving in the field, right? Whatever that is for the use case for your target market, and knowing your customer and not overbuilding or underbuilding the capacity or the delivery or whatever. Have you got any other examples that spring to mind of that sort of measure?
You mean for application or
right.
for?
Right. That would help a technological creator figure out how to apply this thing that they're making.
So at some point, within my time as a technology manager, there was a huge boom of these electric propulsion. Everybody was doing electric propulsion, and at that time, we had somebody saying, "Okay, this is the most efficient motor that you can buy. It's very, very nice. Look at this. This is, technically, this is perfect. This is genius." And then what we asked them, like, "Okay, but where do you use it for?" And they're like, "Well, what do you know? What do you mean?" Well, so we said, "Okay, this class will be interesting for geo, but if you use this, it's very efficient. It's very great, but it will not help us because you need to spend up to 1.5 years doing your transfer, and at that time you'll go through all the radiation belts and, everything is shitty. You lose 1.5 years that you can use for your satellite, so it's not really applicable for that. And it's, on the other hand, it's also not efficient enough for station keeping. So what is actually your use case?" And then at that time it became like, yeah, okay, we have not really thought of this yet. So it's been millions of euros at that time was then invested into something where there's just not a solid business model for it. And you see this quite a lot. I mean, you'll be surprised at how much money is sometimes wasted by not really understanding an application for it.
Mm-hmm. Well, very good. I'm familiar with the software as a service world, and we see that all the time where somebody gets a brainwave and goes out and creates an app. Some of my early episodes of this show, the Cold Star Project from season 1, are with SaaS founders, and that say the same thing. They create something nobody wanted. They think it's great, and then they have to go out there and find a market for it, and sometimes they just can't, and it's a struggle. Whereas if you went and found a problem and then created a solution for it that people were excited about paying for, you would have a much easier time. And that's not as difficult as it sounds. It's just a different way of looking at the problem. So, Egbert, I guess who should be contacting you, and what would be the best route to do that?
So basically any startup, mid-sized company, something like that is interested in investment of OHB. So I'm also responsible for corporate development and acquisition. So I don't only do VC. So basically any company that says, okay, here I would maybe like to have OHB as an investor in whatever form as possible, they can just contact me. Possibly the easiest is over LinkedIn. Just write me a note and we can exchange contact there. Yeah, and then basically anybody also has a great idea. I mean, what we also, we also a very big aerospace company. So if you're saying, okay, we might not want to have an investment from OHB. So for example, you deliver very nice components, have a cool idea. We often don't buy components because if we would invest to a company that buys components, it makes it less attractive for our competitors. Therefore, we usually strategically don't do this. But on the other hand, we might find a way to cooperate. And if you say, okay, we have a great idea, we could be great for your supply chain or something like that, feel free to contact me as well. So not only for investment related things, but maybe to have a cooperation contract or something like that as well.
All right.
In general, also, if we invest in something, it's always easier if you're already cooperating together and you know each other for a bit longer, and you know what people are doing is good work, let's say like that, then let's say for us, the barrier to invest is a lot lower. So.
Okay. Do you require for investing that the company be post-revenue?
No.
Okay.
If it's a great idea, then, and it's also with space, it's long until you, let's say, found it, make your product, until you go to revenue. It's a little bit different if you have, let's say, data application, but if you do hardware, it takes a long time.
And we better see some of those letters of understanding, letters of intent.
Yes, yeah. I mean, it could also be if you say, for example, OHB as a potential customer, I want to have a letter of interest for us, then why not contact us as well? We have a very high interest to get all of these space companies working and be successful. I think that our industry definitely has a lot of innovation, but it could be moved a little bit quicker ahead, I would say. So anybody needs some help with that? Well,
okay. Well, that's cool. I'll definitely direct them to you. My guest has been Egbert van der Veen, Head of Strategy and Managing Director of Venture Capital at the OHB Group. Thanks for being here.
Thank you very much. And we'll look forward to talking to him.
Hey, this is Jason Kanigan, the host of the program. Thanks a lot for listening to the Cold Star Project. If you want me to send you new episodes of the Cold Star Project so that you don't have to go hunting around for them or watching YouTube or anything like that, go to this page, coldstartech.com/MSB. That's short for Make Space Boring, which is what we're all about. And drop in your email address there, and I will be able to do that for you. Make Space Boring is another little show that I run. It's a shorter format, quick interviews, and news of the day, and sometimes an update of who I'm meeting and what I'm learning in the space field. It's on the same Cold Star Tech channel. Speaking of which, on the YouTube channel, I can do something I cannot do on the audio-only version, which is add playlists. And so there may be topic area playlists on the YouTube channel that you would be interested in digging into and going down the rabbit hole and learning more about. For example, space law and policy, space situational awareness, lunar mining and construction and fun stuff like that. So go check that out. That is at coldstartech.com/play. That's the short link to get there. Anyway, thanks for listening, and I look forward to talking to you soon.